Hello everyone. Dev Accelerator has announced its June 2025 quarterly results. The company's first results after getting listed on the exchanges in September. The numbers reflect stability in its co-working space business even after the IPO, with a healthy mix of revenue and improving control on costs. Let's break down the performance and understand what this quarter means for the newly listed company and its investors. This quarter, Dev Accelerator reported 55.6 crores in revenue. That is more than double the 24.9 crores it made in the same quarter last year, a massive 124% growth year-on-year. Compared to the March quarter, when the company reported about 65.4 crores, there is a small dip of around 15%, which is expected after a strong year-end quarter. Still, the year-on-year growth shows that demand for co-working and managed office spaces remains strong. The consolidated profit before tax came in at 0.94 crores, compared to a loss of 5.66 crores in the same quarter last year. That is a complete turnaround from loss to profit. However, after adjusting for tax and other items, the net profit stood at 0.14 crores, which is much smaller but still a positive start. Last year, the company had posted a loss of nearly 6 crores, so even a small profit now signals that the business is stabilizing post-expansion. Operating costs were high, as expected for a company in the co-working business. Cost of services was around 16.8 crores. Employee expenses were 4.6 crores. Finance costs were 12.3 crores, and depreciation was about 14.5 crores. When we add everything, total expenses came to roughly 56 crores, which means margins are tight. But that is normal for a real estate and workspace operator where rental costs and depreciation form a big chunk of expenses. Cash flow data shows that Dev Accelerator continues to balance between expansion and profitability. The key improvement here is that losses from last year have narrowed sharply, from nearly 6 crores in Q1 fiscal year 2024 to a profit this year, meaning cash operations are getting healthier. The earnings per share for this quarter stood at 0.02 rupees, compared to a loss per share of 0.92 rupees last year. It's a small number, but again, the important story here is the shift from red to green. Dev Accelerator runs multiple subsidiaries and associates. Together, they contributed to the group's overall consolidated performance, which is why the consolidated results look slightly stronger than standalone, especially in terms of revenue mix and diversification. The company completed its IPO in September 2025, raising funds through an issue of 2.34 crore shares at 61 rupees per share. This capital will be used to expand its co-working spaces, enhance technology solutions through its subsidiaries, and strengthen its operational capacity. The co-working industry in India is growing rapidly as more startups and corporates move to flexible work models, and Dev Accelerator is positioning itself to capture that demand. So, overall, Dev Accelerator's first quarterly results after listing show a strong recovery. Revenue more than doubled year-on-year. The company turned from a loss of 6 crores to a small profit, and margins, while thin, are improving. With new IPO funds and a growing market for flexible office spaces, Dev Accelerator's next few quarters will be crucial to see how efficiently it scales its business while keeping costs under control. For now, it's a steady start to its life as a listed company.